Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It is March 2nd. This will be our chart lesson for the day. This is going to wrap our week up. No chart lesson on Fridays. Another great trading day, another big trend, except this time it's down. We took back a lot of what we had, what we made yesterday. So, interesting day, but a lot of good trades today. And most of them were fairly easy to see today. Um, Really, the downtrend started just before the regular session opened, and it looked like it was going to try to bounce and maybe be a range day, but it just continued on. And just remember this: anytime you trade we traded down before we went into this trading range. So generally, um, unless you're going to end up with a reversal type day, when you continue on trending again, you're probably going to continue in the same way that you came into that trading range. So just remember that, keep that in mind. Um, and if you traded up real big and went into a range, I think we did that actually yesterday. Um, Notice that we traded up and went into this range, and then we went into a little bit of a not you could still say that's range like, but this is one where we really went in a range. And then when we broke out, we continued up. We ended up turning down again, but notice how when we broke out successfully, we went higher. And that's generally the way it works. So, um, and again, nothing is ever written 100% in stone, but generally that's how it works. So, this trading range, or this looks range like, but you can see this is just a continuation of the trend down from the overnight yesterday. And so this was easy to find this if you just drew the line off the top, off the highs and the lows, and then you drag it up an equal distance. That's right where the upper trend line ends up coming down. We got a little bit of a close outside right here. So once we made this new low, you had to be leery that we might get a correction, and we did get a correction, but it just didn't continue on. So we corrected for a couple of hours, then we started trending down again, and that's generally, that's all you really need. Once you've had a break and a new low, you don't always get a reversal. You just get a correction, and that's considered a correction. And you can see there's there's a um, there's a leg up, then we went sideways and got a second leg up, and then it sold off. But there's a lot of up and down in between those two legs. And also coming down, I measured this first leg. You can see that, and then I drug it over. And so we were looking for a second leg down, and you see we got actually a measured move to the tick before it bounced. And then you got two legs up, another push down, and then we went sideways before selling off again. So pretty good day. And you also, should have probably considered this when we continued going lower. Get this first leg here, and then look for, and again you get exact to the tick before we correct it again. So always draw those legs and look for measured moves, because in both of those cases you got exactly a measured move to the exact move to the exact tick. So, but let's back out and talk about the trades. I need to get done pretty quick today. When I came in, of course, we had this working down, and we would actually were correcting here, and I wasn't sure if this was a break. But when you draw that measured move, and then it came back into play right here, then you pretty much got to go with it. So, um, but you could also play this early on, pretty much like a trading range, and this looks like a failed break higher. So that's why I like this short here, even though we haven't really closed outside that little channel, being that far away from the EMA, and looking at a failed break outside of that. I like that for just to come back to the EMA, and then it pulls back again and tests that and holds and turns down, and it actually did it all in one bar. So I liked having a stop right here and then continuing on down with it. And then of course you get your reversal pattern. You get a failed second entry long here, and it confirms that trend line. So I like going short there. There's enough room to get out. It's close on this move, but you got your double bottom over here. So you figure you'll test that at least, but it just pushes on through. And then it pulls back. And where does it turn down? You actually get a double test here of this high. Notice you tested it once, twice. And so that's a fairly bearish bar. So I like entering there. And then when it comes back and tests it again and confirms that trend line, I like adding on right there if you're not already out, which you probably wouldn't be if you entered with a stop. Um, and so you get a little double load on that move. And I already showed you how I looked for the measured move, so I was really looking for it to come on down to here a little bit further. And this one was tempting, but if you draw your trend line, there's no close outside. It actually pushes through the EMA or through that trend line a little bit. Of course, your trend line could be off a little bit, so even if you adjust for that, it's still just not a great setup. I was a little leery of it. There's a hidden second entry in there. If this bar right here, which is your actual signal bar, would have been real bearish, I'd have said take it. But with this one, I think you're better off to wait. It comes back, it makes a double top. That bar is fairly bearish, so you might have considered there. But when you end up getting this next bearish one or this one, you probably would have got left behind on this one. But right here, I'd just go short. Or when it broke lower, I might try a limit order, but I just like putting a stop there. But you might have considered here, and I could have lived with it. We didn't quite have a new high in, and again, we're getting a little bit what looks like a close outside. So you got to be leery of it, but you could consider that one. And if you did enter there, I probably would add on this next one. Maybe not, since this is not a perfect setup. But if it would have ticked higher, I'd say, and went lower, I'd say add on. Like it is, you might just take one or the other. And then, of course, you get a second entry short here. Look how bearish that is. But notice we're not back to the trend line. We've already got what looks like a close outside and a new low, and we've got a measured leg, two measured legs to the tick here. So this one's a little bit leery, even though if you draw your short-term trend line, everything played out. You got your close, a new high, big bearish bar. The problem is it didn't break lower on this next bar. And notice even then, when it did break lower, finally it ends closing back inside. So I was a little leery of that one. But you still could argue for it, and it would have worked. So I'll make that one green. Then we move up. We get a break. We try to go higher, and then we turn back down. Again, you don't have a close outside the new high yet, so I was a little bit leery of that one as well. It is a double test of this, basically. So there's some reasons to take it. We're close to the EMA, which could have bounced. You see it tried, but it still would have worked. Then we come back and we get another second entry right here. But we've got everything in place that we might reverse here. So again, I was a little bit leery of it. Again, you could argue for it maybe, but I think you're better off to wait. And then when you get the double test and another bearish bar, I like it then. And then we actually come back and test it again. You can see we got a trading range going now. It's pretty obvious. I like that one. I don't think you want to take any of these longs. You could have argued to go long here since you're so close to the low and it's a fairly bullish bar and it is two legs down. So you might argue for that one, but I just don't think you were smart taking any longs, especially this late in the day, because generally when we traded down into this, we may get another leg up, but we're probably going to trade down some more. That's generally how it's going to work, as I alluded to earlier when we talked about it. So yeah, you might argue for that one, but I'm gonna leave it green, even though there's some days, if it was a range day, that'd probably be blue. If it was a range day, I might even say take this one if it's a little further away from the EMA. But notice we work up, and you get a failed break outside, a fairly bearish bar. Go short there, and when it came back, I like adding on. And if that gets you into the 2 o'clock hour, but that would have been a nice trade. If this wasn't after 2 o'clock, here's your failed second entry long, the reversal pattern. I'd say go short right there too. So Uh, excuse me. So I'd say go short right there too if it wasn't after 2 o'clock. And it's so close that it's been such a strong day that we're probably coming down to at least here, but we may continue on down. So it might be worth taking even after 2 o'clock. So yeah, another really good trading day. The start of the week looked like the last few days of February were atrocious, but the last first couple of days of March have been really nice. So hopefully we can continue to get some movement like this and have some nice volatility and some nice setups. And like I said, most of these setups were fairly straightforward. It was pretty obvious we're trading down. Uh, just wait for the right setup. Second entries, double tests, failed breakouts, things like that, and go with the trend. And you couldn't hardly go wrong. So notice if you'd sold pretty much any of these pullbacks, you probably would have made money, But if you follow the rules, you don't get trapped. And just remember that the idea when you're getting short is to short the corrections and not be going short down here at the lows, which is what most amateurs do. They're wanting proof it's moving lower, so they're getting short here and here and here and here and here and here, and instead you got to be getting short at all the pullback highs. And if we were trending up, you're getting long at all the pullback lows. So you got to remember that, and it's hard to do. It goes totally against common sense because common sense would tell you want to get in down, when it's proven it's going lower, but by that time you're going to have a correction. So just remember the pullbacks to the EMA, pullbacks to the trend line, and pullbacks to strong support and resistance. That's the key. And notice where all your entries are. That's where all of them are. Pullbacks to the trend lines and the EMA and support and resistance. And those are your key entry points. If you stick to those, you're going to have a lot better luck. You're going to improve your trading. So it's when you start to, enter at the wrong places that you start to have trouble. And anytime you get far away from this EMA, going short is more dangerous because notice how it constantly snaps back to it. And when it's going sideways, it's swinging on either side. So those are the keys to all of it, is being patient and waiting on prices to come back to these important key entry points. So, yeah, I'm going to wrap it up. We'll be back again to do it Monday. Hope you have a great trading day tomorrow, a great weekend, and we'll see you next time. This is Mack with PriceActionTradingSystem.com, and I'm out of here for the week.